Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 21st of December, the shortest day. And pretty short for Argo blockchain at the moment, even though we bounced back from effectively the old support area from back in July, 83 pence or 83.5 pence low there. And we've had 82 is a bear trap low for this month. That may explain the rebound. Also, what might explain the rebound is the bullish divergence there with the oversold RSI near 30. That might give us a little bit of a push back towards the £1 105 area, which was support on the way down. But with the 50 and 200-day moving averages both falling at the moment, still looking a bit pressured for the Argo blockchain share price at the moment. And so certainly don't want to see the shares fall much below 80 pence on a sustained basis. Another stock which has been in the wars, I was actually surprised that it managed to hold up for so long. Boohoo, after those revelations, I think sometime last year, something like that, where we had the decline from, what was it, £4.20 to £2, but the shares have delivered that move to the downside that some might have been expected. The good thing now, though, is that we've got what looks to be bullish divergence in the RSI window, so much lower lows for December. But the RSI on this occasion didn't go any lower than the 12-13 level that we had back in October, so that could trigger at least a gap fill move, maybe up towards £1.31, which is the top of the gap there. Best case scenario, maybe a back up to 140, 145, but the upside really only valid while we hold above the £1 area. That would sort of give us yesterday's low around 105, so maybe just below that as a stop loss. So above 105, looking for 131, then maybe 140, 145 as a best case situation as we unwind that very oversold RSI situation. Situation which is rather more straightforward is Chamberlain. Here we've been looking for recovery in the stock for quite some time. The false dawn move back last month as well, and final sort of lows for the start of this month. But it looks as though if we get an end of day close clear of 7.5 pence, we could be on to our goal of a May resistance line projection up to 12 pence over the next 1 to 2 months. Confidence is arrived with that gap to the upside we've had today, so it's a bear trap gap reversal, which should have some legs over the near term. The other thing we've also got actually is bullish divergence in the RSI window, so the lower December low but a higher RSI for December on the price low. So should be a bit of traction there for the bulls over the near term. Managed to miss Itaconix out on the RNS hot list this morning, probably just due to being a bit too early in the day. Here we've broken that line of the resistance from June around 5 pence and above 5 pence, looking for the 200-day moving average area at 8.25, maybe up to the top of that gap there to 8.6 pence, something like that, as soon as the end of next month. Another situation where the RSI is interesting. Although we went slightly lower, the price went much lower, so there is a divergence situation there, and also a bear trap from below the old March support. I think I looked at that before, actually, of late. On to iMedia, which may be sorting itself out after what has not been a great ride for shareholders, as you can see by that rather dramatic gap down that we had over the summer. Here we've got a situation where we'll just see the shares trying to break out of this triangle that they've been in, gap higher as well. In fact, island reversal, bear trap island reversal, so that's pretty impressive. That does suggest that we should go to at least 16, 17 pence, which was October resistance, and maybe a bit more, maybe up towards the 20 pence area, if we can get a decent weekly close through the resistance line from September and the 50-day moving average around 13.5. Let's see how that pans out. On to MediaZest, which is not the most liquid stock on the market, but we do have this rising trend channel that you can draw from back in the summer of 2020. And top of the channel here heading for 0.17, and that's valid while we hold above 0.8. 0.08. We got extra confidence from the gap higher today through the rising 50 and 200-day moving averages. Next stock is Overcare, which has also a rising trend channel in place since, I suppose it's a 2-year one, and that's based around 12 pence, above 12 pence. We're looking at the top of the channel as high as 22 pence, so maybe over the next 2 to 3 months, something like that. We did have the resistance line break there in August, so in theory we are already on our way. Petroneft is the next stock on the list, and here we're looking for a situation which shows how we've got another sort of price channel floor rebound. That's been in place since the beginning of the year. The floor of the channel at 2 3/4 pence, and above that looking for top of the channel, maybe up to as high as 6 pence over the next 2 to 3 months, something like that. A decent weekly close above the 200-day line at 3.3 would build some confidence, as does the way that we've got the shares bouncing off very oversold territory. The last time they were as oversold as this, it was the start of a decent rally for the shares. Finishing off with Rockhopper, which had a pretty strong rally earlier this month, and obviously it's come back from that, but the good news is that support was found above the top of the gap and also right on the 50-day moving average at 5.9 pence. Above that, we're looking towards a decent target, perhaps as much as the line I'm about to draw at the moment, so maybe looking towards 12 pence, and that could be hit by maybe the end of February, something like that. But a decent risk-reward above 5.9, looking for 12 there for Rockhopper. That's it for me today. More updates tomorrow.